Welcome to my YouTube channel. Today I am going to speak on a very important topic which is relevant to many people who do not invest in stock market or mutual fund. They believe that these are risky affairs, or quite a few of my friends have also talked they are speculative in nature, which is not true. So I'm going to talk about what is mutual fund, what is stock, who should invest in stock, who should invest in mutual fund or FD, and what are their pros and cons. Because if you want to be really wealthy, the only one option is taking shelter of stock market. And if you are scared of the stock market, if you think it is speculation, you are missing something big opportunity in your life which will not come second time. And therefore, for many people who are retired, they get a very large money as a lump sum at the age of retirement, and they put in the fixed deposit. And today, as you know, the life expectancy has gone up. People normally survive up to 80 years, 90 years, most of the people, if they live healthy. So, from that perspective, your center of living will keep on depleting, and you have to depend on your children for your survival. From this point of view, it is very important to really manage your finances properly. And I think today's video will be very useful in this direction. So, I urge to you, please go through the whole video. Don't avoid it. And if you have some comments to make, please do write to me. I'll certainly reply. So let's move forward. So who should invest in the stock? See, normally, unless you are knowledgeable about the stock, a stock investment means buying a fraction of that business. So primarily, will you do a business if you don't understand the business? The answer is no. Then why you invest in a stock which you don't understand? Most of the people, they take a tip or they learn from, they hear on certain news channel, this is stock you should buy for 10, like this period and all those. So without understanding, without knowing the business, they buy this stock. And therefore, sometimes it works, sometimes it doesn't work. And they develop a feeling that it is speculative. As I mentioned to you, unless you understand the business, you should never buy the stock. So let's say if you are talking about Reliance Industry, so you should have idea about what is Reliance Industry is all about, what the management is, which area they operate, what is the prospect of that area. So it entails a fair amount of even research, which for individual could be a problematic stuff. The bottom line is, if you don't understand it, don't buy stock directly. Then comes whether investing in stock and mutual fund, how they are different. So let me take first how they are similar. Whether you invest in stock or mutual fund, both money goes to the stock market. Mutual fund is going money being routed through a fund manager to the stock market, whereas in stock, money is going directly to the stock market. But at the end, both the money lands up in the stock market. So from that perspective, both of them are very similar. Only thing is, in one case, you are investing directly in the stock, where you have to do a lot of research. Other case, you take shelter of fund manager, and then you do research on mutual fund. Which mutual fund is good? Incidentally, today, there are 7,000 plus mutual fund schemes. So unless you understand it, you may get some return, but in order to get an optimum return, you must consult an advisor who is knowledgeable. And it is very important to understand that, because many times for saving a small money, people lose out a big return. So second point is holding periods. If they invest in stock, they think that the returns would come in 6 months, 10 months. So if you are that category of people, it is a speculation. Don't do that. You will never ever make money in the stock or mutual fund investing for 6 months or 1 year. I can tell you, let's say if you buy a piece of land, do you see the land price every day? Tell me. Answer is no. You see after 5 years, after 10 years. Similarly, if you are investing in stock or mutual fund, your time horizon has to be more than 5 years minimum. So if you do for longer time, you will be reaping a huge benefit. And if you really don't do that, then you will suffer. Now, in order to find out what your investment, how they are performing, you need to understand how they are placed. So you need some sort of yardstick. You need some sort of comparison. One of the comparison could be with fixed deposit, which gives you today's for senior citizen could be 7.5%. But since you are taking a risky thing, fixed deposit is not that risky. You are going through risk appetite. So here you have to compare with something which is in the market. So Nifty 100 is normally considered as some sort of benchmark, some sort of yardstick. So in order to understand effectiveness of your investment, you need to really compare your performance with the Nifty 100. So in that case, you know whether you are performing better than the market or worse than the market. and that is very important. And as I mentioned earlier, many people talk about doing SIP. So if you do SIP for 5 years, so even though you take a SIP of, let's say, 10,000 for 5 years, you can see how much that money becomes. Let me take a calculator, a SIP calculator right away, and show you how much this will become. So here is the SIP calculator. Let's say you are doing a monthly SIP of 10K, 10,000. 10,000. And expected return is 12%, which is the market return. Normally, Nifty gives a return of 12 to 14%. At current stage, Nifty has been giving a return of 14.5%. And this doesn't mean that this is going to be same in time to come, because today has been a great time. So now, if you do 1,000 rupees, 10,000 rupees monthly SIP for 10 years at 12%, invested amount is 12 lakhs, and estimated returns is, your total corpus will come around 23 lakhs. This return, if you do a little bit of spicing here, if you do a good thing, 14 to 15% return will be simple. That case will land up in 27 lakhs, 28 lakhs. Now here, if you do the tenure, if you make it, let's say 15 years tenure, instead of 10 years, if your tenure becomes 15 years, in that case, you will have, let's say, 67 lakhs. And then if you invest for 20 years, I guess you might cross a crore. So 20 years, 1 crore, 51 lakhs at 15%. If you make it, let's say 13%, which is very reasonable, still you will land up 13%, 1 crore, 40 lakhs. 13 is very, very reasonable. So friends, what I have showed here is 10,000 at rate of 13%, 20 years time horizon, you land up in 1.14 crores. And 10,000 SIP is not a great deal, it's not a big deal. Many people can do it today. Who earn a decent money, they can do it today. So normally the question comes, how much SIP you should be doing? So SIP normally, as a thumb rule, if you are in a low income, let's say up to 2 lakhs of salary, then your SIP should be 10% of your salary. Let's say in that case, if somebody makes 2 lakhs, then 20,000 per month if you do SIP, and if you carry for 20 years, you will have 2.5 crores in your kitty. And you take help from some advisor. And then question comes, to answer those people who believe that investing in mutual fund is risky. Let me tell you, there is a research, published data with IMP and some government organization. What they say is, if you are investing if your time horizon is 1 year, then the risk is 25%. Time horizon is 2 years, risk becomes 17%. 3 years, 8%. 4 years, 5%. And 5 years, zero risk. This means the negative return risk, if your time horizon is 5 years, becomes zero. What it means, so if you are investing for 10, 15 years, there is no risk. And what other advantage it has? Let's compare this with FD. Now FD, when you invest, let's say your tenure is 1 year, you've done 10 lakhs FD. Now what happens is, if you need money after 6 months, you go and break the FD, there's a penalty. You can't withdraw it in between. So liquidity is issue. With a small money, you can't really invest in real estate, because you need a big money to buy real estate, and selling also becomes a problem. Buying, selling, both are challenges. So, but here in equity, you can start with as small amount as 500 and go on. And then you can do the complete diversification. Another thing with the stock is, like when you buy a stock, you have to be very sure about that stock. But when you are buying a mutual fund, you are buying a basket of stock which that fund manages. So primarily from that angle, mutual fund becomes more diversified. You don't need to do so much of research, because somebody else who is the fund manager is doing research for you. So, and then you can do incremental investment. Like this month you did, let's say 10,000. Now you have got some bonus coming in. So that month you can put some extra money. So all type of possibilities are there. And the biggest thing is liquidity. When you want to take it out, friends, put a command. Within a day or two, you will get money in your bank account. Nowhere else this liquidity will come. So that's the power of stock market. Similarly, in stock market, you can sell the share and money comes T+1. Some might take T+2, but most of the share comes in T+1, like transaction days plus 1 day. So that's the liquidity, very high liquidity in the case of stock investment or mutual fund investment, which you don't see in FD, which you don't see in real estate. And talking about taxation, both a stock and mutual fund, they offer a very good tax thing. You are taxed at 20% flat if your capital gain is long term, then 15%, and then short term 20%. Whereas in case of FD, you are taxed at your tax rate. And second thing is, taxation in mutual fund happens only at the time of selling. So if you are having a fund for 5 years not selling, you're not paying tax. Whereas in FD, every year tax is taken out from your interest. So what happens here, that money lies in your account and that also gets compounded. So you have double benefit here. Benefit of lower taxation and also compounding. That really helps in creating a wealth a lot, friends. So as I mentioned to you, both stock and mutual fund are very important aspect of this. Coming back on risk, and those for those friends who believe it is a speculation, it is not a speculation. It is a speculation if you do a day trading. Like today you buy and tomorrow you want to sell, then it is a speculation. The moment your time horizon is longer, it is not a speculation. And for your service, I have brought a set of courses which is available at drbishram.graphy.com. If you wish to learn finance, some basic idea about finance, please go. There's a free course. If you complete the free course, which is about 1 hour, 10 minutes or so, in one day, I'll give you 50% discount in the 5 courses which are on the site. And those prices are already discounted 80%. This is just to promote a sort of interest in the people, and that you may say, why you're not giving free? Friends, if you make everything free, nobody gives value to it, nobody buys it, nobody takes it, nobody becomes serious. There was some money we are collecting, which is important for you to understand that there's a value behind, and you invest your time and get really equipped. So moving forward, coming back to difference between MF and stock. Now, a stock, although many times they talk about SIP, but the stock SIP you can't do, whereas mutual fund SIP you can. Now, a stock price, let's say MRF is 1 lakh, one share. You can't buy 0.01 share. But in mutual fund, if some fund is holding MRF, you invest 500, you buy proportionate amount of all the shares. So when you buy a stock, there is the amount required, there is a risk involved, and in mutual fund risk, the amount required could be very less, and you get all those shares in a small proportion. So that helps you in diversification. Second thing which is very important is research. If you want to buy stock, you have to do a lot of research. And as I mentioned in the beginning, unless you understand the industry, don't buy it. Unless you know what the business you are buying, because you are doing a business, you have a ownership of a fraction of that business, you should never invest. So friends, from that perspective, mutual fund becomes a better way. And particularly for a small investor also, irrespective of the amount, one can buy mutual fund, which is not possible in stock. You can buy some stock, which may be penny stock, but the stock which is worth, by buying, or few stock which are highly priced that you can buy, and those may give a very different return. So from that perspective, mutual fund is very important. The last thing I like to talk here, many times when you fall sick at home, you take paracetamol and some other medicines because you do your own jugaad and then it works. But quite some time you refer to a good doctor. So here it is your money. Don't play with your money unless you are knowledgeable. It is good to be knowledgeable because that will really create a lot of good things for you. But if you don't have time, because stock investing is a full-time profession. Those who don't do full-time don't have time to give a lot of attention to the stock investing. My advice would be pay little and go to a good advisor, which is very, very important. And then if you consult him, you will really enjoy it. He can give you a lot of advices, and this really works, believe me, friends. Like you call a doctor for your sickness, for financial sickness, call your advisor or get in touch with an advisor. You should have like a family physician, a family finance advisor in your sort of antenna. Don't depend only on Mr. Google, because you are doing your profession, which is a full-time profession, and this you will not be able to do justice, whatever you do. From that perspective, it becomes very, very important. So friends, what I have discussed today, stock versus mutual fund versus FD and real estate. Now, if you want liquidity, if you want to really become wealthy, the answer is stock investing. Stock investing entails a lot of research, which you don't have time. So in that case, you can depend on taking route of mutual fund because they are same. But certainly consult some advisor. In case you have any need, feel free to reach me. I hope you like today's deliberation. Thank you so much for your time. Have a great day. Jai Hind, Jai Bharat.